Something is happening right now, thousands of miles away, but it could hit your bank account by the end of the week. It's the war in the Middle East. So oil prices are surging, global markets are panicking, and here in the UK, families are already struggling with rent, food prices, mortgages, petrol, electric, and everyday bills. And maybe it's about to get squeezed even harder because when oil rises, everything else rises. Your weekly shop, your fuel, your flights, your deliveries, your heating, even the cost of businesses operating around you. And today, the big question is, could the Iran conflict trigger another cost of living wave across Britain? Because if it can, millions of people are about to feel it. Stay with me because in this video, I'm going to break down of what's happening with Iran right now, why oil prices are reacting so aggressively, and why the UK is so vulnerable, and how it affects ordinary people and what could happen next. This isn't just a foreign news anymore. This may become your story. Global tensions involving Iran have escalated once again and markets are reacting fast. The key issue is fear. Fear of wider conflict, fear of disruption, fear that one of the world's most important oil routes could be affected, the Strait of Hormuz. And around one-fifth of global oil and gas trade passes through that narrow stretch of water. Some people hear foreign conflict news and think, that's sad, but it's got nothing to do with me. But unfortunately, that's not how economy works. Britain may not be in the Gulf, but Britain is deeply connected to global prices. The UK imports energy, the UK depends on transport, the UK relies on food supply chains, and the UK runs on businesses whose costs rise when fuel rises. So even if a single barrel of oil never physically enters Britain from that region, the price benchmark affects everyone. It's like an auction. If global supply tightens, buyers everywhere compete harder. That means higher prices worldwide, and Britain feels it fast. Let me explain something many people underestimate. When oil rises, people think, okay, petrol gets dearer, but that's only step one. So step one, petrol and diesel. Fuel stations react, drivers pay more, commuters suffer, tradesmen, they pay more, taxi and delivery drivers pay more, businesses with fleets, they pay more. And then step two, transport cost. Lorries moving food across Britain, that will cost more. Ships bringing imports cost more. Planes cost more to run. Courier networks cost more. And then step three, business cost. Restaurants receive pricey deliveries. Builders pay more for materials transport. And retailers face rising logistic bills. And factories face higher input costs. And then step four, consumer prices. Businesses pass costs on, sometimes slowly, sometimes immediately, and consumers pay. And step five, inflation pressure. If prices rise broadly enough, inflation climbs. Then interest rates may stay higher for longer, then mortgages remain painful, then borrowing remains expensive, and then growth, it just slows down. So oil isn't just petrol, oil can touch almost every shelf, street, service and sector. That's why markets panic when conflict threatens supply. And remember, this can happen before any actual shortage occurs. Sometimes fear alone raises prices. Most people have never heard of the Strait of Hormuz until recent years, but it may be one of the most important places on Earth. It's a narrow waterway connecting Gulf oil producers to global markets. So tankers carrying crude and gas pass through it daily. If shipping slows, insurance rises, delays rise, risk rises, price rises. There's something many people in the UK notice every time oil jumps. Prices go up fast, but comes down slowly. People see at petrol station first, one day prices jump, and a week later they barely fall. That public frustration is real. But beyond petrol, Britain is vulnerable for another reason. The UK economy has already years of pressure. Pandemic disruption, energy crisis, inflation shock, rate hikes, mortgage resets, food spikes, slow growth. Now add another oil shock, that becomes dangerous because households have less resilience. Years ago, some families could absorb higher costs. Now many cannot. One extra £40 here, £60 there, £100 more on essentials. That can break budgets, especially for low-income households, family with children, drivers who commute daily, self-employed workers, pensioners on fixed incomes, and mortgage holders rolling off fixed deals. Let's break down the next few weeks. So scenario one, tensions ease quickly, diplomacy improves, shipping stabilize, oil cools, markets recover. This would be the best outcome. And some recent reports suggest oil dipped below $95 on renewed hopes for talks. If momentum builds, pressure may ease. But scenario 2, that's conflict drags on. So no resolution, shipping remains risky, prices stay elevated. That means ongoing pressure on fuel and inflation. This is probably the most realistic near-term concern. And scenario 3, a major escalation. Wider regional disruption, serious supply interruption, sharp oil spike, emergency responses, and markets panic. This is the nightmare scenario. Even if temporary, it could create another global inflation surge. And remember, markets often react before real shortages actually appear. So volatility itself becomes damaging. Let's talk directly about something people care about: petrol and diesel. Will prices actually rise? If crude remains elevated, pump prices usually face upward pressure. And how quickly depends on existing stock that bought at older prices, retail competition, taxes, refining cost, currency exchange rates, wholesale contracts. But generally speaking, higher crude eventually creates higher pump pressure, and for Britain that matters massively. Drivers already face expensive motoring insurance, road tax, repairs, parking, congestion charges. Now add price of fuel, that hits worker the hardest. Here's the part many people miss. Even if you don't drive, you still eat, and food prices can be affected by energy. Do you know why? Because farming uses fuel, fertilizers use energy, processing uses power, packaging uses oil-linked materials, transport uses diesel, refrigeration uses electric, warehousing uses energy, and delivery uses fuel. So when energy rises, food systems feel it, not instantly, but gradually. And that's why after energy shocks, grocery prices can be sticky. And for British household, groceries are already a sore point. Many people still feel weekly shops cost far more than a few years ago. And another oil shock risks reopening that pain. This is where the story becomes bigger than petrol. If oil pushes, central banks may be cautious about cutting rates. That matters because millions are waiting for relief: cheaper mortgages, cheaper borrowing, business investment, housing confidence. But if inflation resurges, relief may be delayed, and households rolling onto new mortgage rates may continue to feel the pain. So yes, a conflict abroad can affect someone remortgaging in Birmingham, or renting in Manchester, or buying groceries in London. That's how connected economies are. Not everyone loses, some sectors benefit. Oil producers, energy giants, commodity traders, certain defense stocks, shipping firms in some cases, speculators positioned correctly. That's why you sometimes see stock markets split. Airlines falls, energy rises, travel stocks weakens, oil companies rally. When households struggle, some balance sheets improve. That contrast can create public anger. You can't control politics, but you can prepare. So first thing, review monthly spending. Know where money goes. Leaks matter in inflation periods. And secondly, fuel efficiency. Combine journeys. Check your tire pressure. Drive smoother. And use apps for cheaper fuel. Third, food strategy. Meal plan. Reduce your waste. Buy staples smartly. And then build buffer savings. Even small emergency funds matter. And watch your debt. High interest debt becomes dangerous when costs rise. And then stay calm. Panic decisions often cost more. Preparation beats fear. Modern life is fragile. We assume shelves stay full, fuel stays available, flights stay cheap, and deliveries stay next day, and bills they stay manageable. But global shocks reminds us that the system depends on stability: shipping lanes, energy flows, political calm, trust, infrastructure. Once one piece shakes, everything can wobble, and ordinary people usually feel it last, but the hardest. Not first, not politicians, not traders, not corporations, families, workers, small businesses. That's the uncomfortable truth. Here are the signals to watch out. Oil price direction. If crude pushes sharply higher, pressure grows. Shipping disruptions matter hugely, and any peace progress can cool the markets. If people fear another squeeze, spending drops, and when spending drops, growth weakens. So let's be clear, this is not just another foreign headline. This is not just traders shouting on screen. This is not just maps and missiles. This could become higher fuel, higher food costs, higher pressure on households, and delayed mortgage relief, and slower UK growth, and more stress for millions already carrying enough. The Iran conflict and rising oil prices may be the story driving the world market today, But if it continues, it could soon become the story-driving kitchen table conversation across Britain. How much is fuel? How much is shopping? How much is rent? How much more can people take? That's the real story. And in the next few days, it may matter more than many realise. If you found this breakdown useful, make sure you subscribe for real news explained clearly with no nonsense. Because headlines tell you what happened, I'll tell you why it matters. And trust me, this story is only just the beginning.